Well, if you spent years managing your own investments, do you really need a financial advisor? Well, that's a question that Bob recently sent into us today. We're going to explore that today. We're going to talk about why even experienced investors might benefit from working with a professional and getting that guidance day in, day out. Welcome in. Glad to have you on the show once more. This is a good question today, Mike. We're going to dive into. Came in from Bob, and I want to dive into this a little bit because I think a lot of people are comfortable doing it themselves, especially with everything that we have online. We have access to a lot of information everywhere, but there's still a lot of value in working with an advisor, right?
I agree. Yeah, there's a lot of great information, but for most people, this is not their full-time, career gig, so to speak. What we're finding is people are good at their careers. It's hard to be good at multiple things all the time. And some people do it, but that's a small percentage of the population. It's, in my opinion, it's good to lean on somebody who does this full time.
Yeah, we're going to take you through that today. Bob's question, we're going to look at that. We're also going to kind of just talk about the value of working with advisors, some areas that you might not be expecting that you need help from, and you'll get that from a team like Principal Preservation Services. So if you want to get in touch with Mike, 888-430-PLAN. That's 888-430-7526. All right, Mike, let me paint the picture for you. Bob says, I have an MBA and I understand investments well, so I've handled my portfolio myself instead of having any professional help, and I've always done pretty well. In your honest opinion, is there any reason for me to work with an advisor? So let's just start off there before we dive into it.
Yeah, we meet a lot of people like Bob. In a sense, we work with a lot of 3M engineers, a lot of people who have self-managed and done well, but things that they're not maybe understanding or privy to is some of the rule changes. And let's talk about required minimum distributions and what's the way to properly take out your RMDs, and then we look at if you have multiple type of accounts, maybe you have multiple 401ks and IRAs and 403bs, TSPs, deferred comp, things like that. There's IRS has different rules for those type of accounts. They're not going to be treated the same way. They're taxed the same way, but not treated the same way. Then we have to look at the Medicare tax tables. There's tax planning, and then not just that, but if you're married and maybe Bob, you do all the investment management, I'm guessing your wife is not interested in that. And so also you need to figure out, it's not just about you, it's about what's going to happen if you're not able to take care and do all that management yourself. So there's a big picture of that, and we offer a lot of help to people like Bob a lot of the time.
Bob obviously confident in his investment skills, and rightfully so. If he's done a pretty good job managing his own portfolio, you can see where that confidence comes from. But beyond just investments, Mike, where do financial advisors typically provide that value that DIY investors just maybe don't even think of?
Yeah, first of all, putting a plan together. Bob probably has several retirement accounts, and retirement accounts don't equate to a retirement plan. So that's the key, is putting it together to factor everything. We're talking about life expectancy, rate of returns, and cost of living, and house repairs and maintenance and travel, and what happens if one of you pass away. It's all important to do a full retirement plan, which is not what you're going to get when you just invest in these accounts. Also, estate planning. We don't do the estate planning here, but I have a lot of experience with estate planning. So does our team, working with estate planning law firm for several years, making sure your house is in order with that, and just being efficient with your withdrawals and your retirement accounts. What are the some of the tricks of the trade, so to speak, that aren't really maybe known when you're doing self-investing? How to avoid excess taxes, how just to leave a bigger legacy behind, and thinking of some strategies that you're not going to get from just daily investing.
I know life always throws us curveballs, right, Mike? And you've been doing this for a while, so you've seen a lot of different scenarios, a lot of different situations, obstacles, challenges that people run into. And I think even an experienced investor is going to face some challenges that they didn't anticipate. So I'm curious, what are some of those common financial blind spots that you see the DIY investor might overlook?
Planning for healthcare is a big one. That is where, you have, money set aside, but you don't think about you're ever going to need healthcare needs or long-term care needs. And, the number used to be, Ben, about half half the people who made it to age 65 will need some sort of healthcare, long-term care plan. Now it's about 2/3. And as we're coming into some age brackets or groups where they have smaller family sizes, and then if that's the case, and if you lose your spouse, like we had a client lose their husband here recently, and their kids are all over the U.S., not close to them, well, who's going to care for you and for those long-term care needs? We always thought we could count on our children, our loved one, but what if they're not around? That's a big one in itself. There's so many things that come with it outside of long-term care planning that we can address, because what I see with these investors where they're just self-managing, they just have tunnel vision, and nothing wrong with that. And they're great, and they can look up, the PE ratios of all the companies. They can look at what's a good buy, what's not a good buy, and they're actively trading. But what they're not seeing is how to be more tax efficient, how to plan for the big picture, things outside of just investing. You need to look at. That's where we open up the doors for them to understand.
Yeah, and you can always start building out your retirement reality roadmap now. Just text the word retire to 21,000 and begin that process. We'll shoot you back a link and you can find a time that works for you. But Mike, I know, as we get older, things change with life, right? And so even when you're on top of things, as Bob might be right now, there's going to be a time, right, in the future where you might not be able to actively manage your portfolio quite as much. So what is the role you play for someone that's in retirement like this later in life that maybe can't stay on top of things like they once did?
Yeah, offload some of the risk, offload some of the pressure of watching over it. It's sometimes we see people have 10 to 20 different accounts, and again, you could do that in your 50s and 60s, and I'm not saying you can't do it in the 70s. It's just gonna be harder as we get older. As I turn 53 here in a couple of days, it's like sometimes you forget certain things, right? And it's getting to be a thing with time. But I think there's a couple things. Making it gives peace of mind to your spouse to know that everything is not just done in your den or your office at the house, that you're actually working with somebody and you're making right decisions. Because we've seen people self-manage and do well, but a lot of times we're seeing self-managers like to do it and they're just not doing it well, unfortunately, and that causes stress and anxiety on the spouse. They want to make sure that things are thought out, and if something happens, they can go to an advisor to work with. And simplifying things. The last thing you want to do if you're traveling in retirement is to try to hook up to the internet and be in the right time zone for when it's open, and make sure that you're making those trades and you're able to keep in track of it. I had a client of ours, they were in the Baltic Sea on vacation, and the markets, they were self-managers, and the markets were dropping, and they couldn't get logged in to make some trades, and they lost a bunch of money. They said, we'll never do that again. So a lot of pressure on you to do things right, and we can help offload that risk, which offloads some of that stress and that anxiety, and simplify the plan. And it's okay. We usually recommend, if you like to self-manage maybe an individual or joint account, not your IRAs. Definitely not your IRA or your Roth IRA. Those shouldn't be self-managed, in my opinion. It should be those individual or joint accounts.
All right, let's finish up by addressing the skeptic out there, Mike. Someone that thinks, okay, advisors, they just pick funds, charge fees, do stuff that I could do on my own. But for Bob and other people like him that are maybe skeptical that you truly could improve their financial situation, what would you say to someone like that?
I understand fees come in a way. And so a lot of times when we do a comparison, we're showing what their projected net would be through a software that we use. And we're showing you are doing all this and you're trading this high risk for this average rate of return projected. That's not a good trade-off a lot of times. And we can show you, yes, you could be paying us a fee, but we can show you what our average net return should be. And I said, I'd rather pay a fee to get a better average return after fees rather than have something very low fees, like just called a Vanguard funds, very low fees, but your net is lower. So it's frustrating sometimes because sometimes they only look at the fees. If fees were the answer to get better returns, then everybody should just be investing in some index funds and some ETFs. But that's not the case. The case is you need to have somebody that will put you in the right type of funds for where you're at in retirement is more important than just tracking fees. We want to see the net returns.
Absolutely. And Bob, in your situation or anyone's, if you want to just learn more about what that process looks like, truly get a better sense of what Principal Preservation Services can offer you, just text the word retire to 21,000. We'll text you a link back. You can pick out a time to meet with the team, or just visit us online, principalpreservationservices.com. You can learn a lot more about everything that Mike and the team does every single day. So check that out when you have a second. We appreciate the question. And if you have one for us, drop a comment down below. Also hit subscribe on the show as well if you haven't done that here on YouTube. Mike, thanks for your time as always. Talk to you again soon.
Thanks, Ben.
Investment advisory services offered through Alpha Star Capital Management, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability. Alpha Star, Principal Preservation Services, LLC, and Principal Wealth Services, LLC are separate and independent entities. Insurance products are offered through Principal Preservation Services, LLC, a Minnesota and Wisconsin insurance agency. Investment advice is offered through Principal Wealth Services, LLC. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products offered by Principal Preservation Services, LLC. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered or guaranteed by Alpha Star.